Welcome. You're tuned into the Small and Mid Cap Show. I'm Hiral Dadia. Let's quickly take a look at our markets are panning at this hour. Overall, if you go to see in terms of Nifty 50 as well, we are at 21,450 as we speak, almost near the day's highest level. Some cooling from that point has happened, but clearly the advance decline ratio absolutely in favor of the bulls, with 41 advances on Nifty 50 and 9 declines. In terms of top gainers, Hero Motor, the top gainer today with gains of 3% coming in there. Divi's Laboratories is seeing a smart run, Adani Enterprises, NTPC as well as a M&M. So again, just ahead of the auto sales numbers, you are seeing some bit of steam that is starting to build with regards to where auto sales companies are concerned in trade today. On the losing end, Infosys down almost 1.5%, and this is on the back of the $1 billion deal that has been called off. Now, this was something which was calculated in the quarterly TCV that was reported last as well. So this is going to be a concerning area. Bajaj Twins are trading under pressure. SBI Life is down 0.3%, as well as a TCS, which is seeing cuts of around 0.3% as we speak. Moving on, if you see in terms of Bank Nifty, clearly an upsurge of almost around 250 points coming in there in terms of where Bank Nifty is concerned, and Bank Nifty is trading at levels of around 47,700. Overall, you have almost Axis Bank, PNB, Bandhan, Federal and Bank of Baroda. These are the top gainers there, and no losers coming in terms of Bank Nifty. Let's quickly pull up the broader markets, pull up the Nifty mid cap as well as the small cap index and see what's happening on that end, because that is something where you're seeing some bit of outperformance. There you go, 0.7% higher with regards to where mid cap 100 goes, as well as if you see in terms of the small cap index as well, seeing gains of around 0.3%, some underperformance with regards to small cap index. J Kumar Infra 19% kind of gains. Alkala Mine and Balaji Mines is another one which is seeing smart moves. All Cargo Logistics continues the up move as well in terms of today's session. Pressure coming in terms of VMart, Maharashtra Seamless, Suven Pharma. These are a few of the names that we have been tracking pretty closely. But let's shift focus to a Borosil. Overall, if you see in terms of where Borosil is concerned, and if you see from a share price performance perspective, no major moves in terms of today's session, but clearly, on a one-year perspective, it's been pretty much flat as well. Overall, a couple of things that are happening with regards to Borosil, new launches, plus there is a restructuring that's happening as well with regards to where demerger goes. To discuss more, Shrivar Keruka joins us, who's the MD at Borosil. Shrivar, good morning and welcome to the show.
Thank you. Thanks for having me.
Always a pleasure. Shrivar, my first question coming to you is, overall, if you see from a business strategy perspective, majority of the things that have been completed with regards to where the demerger goes, the next leg in terms of action is in the month of January. What's the latest update that you have for us?
So as far as the demerger is concerned, we have demerged our scientific business into a subsidiary company called Borosil Scientific, and this company will be listed in the month of January. And we don't know the exact date for this, but sometime in that month, you'll have the listing. And Borosil Limited, which is obviously listed on the BSE and NSE, this will be the consumer division or the consumer products part of the company.
Shrivar, now we understand that both of these businesses are profit centers. Different capital is what they need. And if you see from a business perspective as well, the operational requirements are absolutely different, and that's one of the reasons why you're looking at the demerger. Now, post-demerger, will the second entity be listed on the bourses?
Yes, So Borosil Scientific will be listed both on the BSE and NSE, and you already gave the rationale for the demerger. And I believe that both the entities are very healthy, have a very healthy prospects in the future. And but yes, the capital needs are separate, as well as the the final end customers, the operations are totally separate. So the thought was to separate these even from the corporate structure point of view.
Okay. And anything, I mean, what's in for the investors on the back of the demerger?
Well, the investors are, free. They get for every 4 shares of Borosil Limited, investors have already received 3 shares of Borosil Scientific. And, it's up to them to decide whether to remain invested in both the entities or any one of them as they choose, because like I said, both these entities have separate, future prospects. I can speak a little bit about the consumer business. The consumer business has been growing very rapidly over the last few years. I think we have successfully transformed ourselves from a glassware company to a consumer products company, which is in kitchen and table products. And we've added many new ranges. So that's one theme that we've been kind of following on. The other is, we have been doing a lot of import substitution. So whereas we used to be buying a lot of products from overseas in our brand name, we have now set up manufacturing in India, both our own as well as outsourced manufacturing for these products as we have achieved scale here. So margin expansion should happen also on that account of import substitution as well as scale benefits that we see. So consumer business, I believe we have already given guidance that we will grow between 15 and 20% in the medium term. And I think we are sticking to that guidance. Although in the past 3 to 5 years, our growth has been in maybe around the 25% CAGR, zone. Coming to the scientific side of the business, we have various product categories. We have laboratory glassware. We have set up a laboratory instrumentation division, and we are in pharmaceutical packaging. So these are, 3 separate segments. We recently acquired a company called Goel Scientific in Baroda, and that company is doing process systems for API production as well as chemical process industry. So both these separate, segments have very substantial. Sorry about that.
No problem.
Both these companies have very separate and segregated investor profiles as well as market profiles, and I believe the return on capital employed is quite attractive in both these areas.
Right. So one thing that I want to ask you is, in terms of the guidance, yes, it comes down lower, but that's because of the demerger, right? Because some portion, I'm assuming, was coming in from ClassPack. So right. Overall, what's the goal looking like in terms of increasing both these businesses? Consumer is something which everyone is really aware of. ClassPack is something where you mentioned about pharma packaging as well. How much do you think will you be able to scale that up to?
Yeah, so look, the pharma business or the scientific business is definitely slightly slower growth compared to consumer. And we have always given a guidance of between, say, 10 and 12% of revenue growth. Our margins typically tend to be a bit higher. The gross margins are definitely higher in that business. What we have done, because of the slower growth, we have tried to invest in new product verticals to, supercharge that growth. And this means also investment in people. So we have set up our R&D center in Pune, where we have been looking at developing indigenous instrumentation. I mean, we can send, the mission to Mars, and we have a very strong automotive industry, but somehow as a country, we are not making, high quality lab equipment. So there's it doesn't make sense. So we said, why not us being a scientific company, why not us try to make, world-class lab equipment, both for the Indian market as well as for the export geographies. So that is, stab we're taking in Pune, in our R&D center. And I think we have already been doing this for the last 4 years. We've achieved a reasonable traction in some areas like nutrition, protein testing, fat testing, fiber testing. And these are all things which are used for the food industry, for example, or for the water, pollution control testing. So, you'd be surprised to know that most of these equipments were being imported from Germany or from the US or even Japan. And we are able to make world-class instruments here already at a fraction of the price and, give great service to our customers. So it's an ocean out there in terms of what are the opportunities in this in this area, and that's where we believe Borosil Scientific will focus a lot of its energy and time. That being said, in terms of investors, in terms of hard numbers, instead of 10, 12, can we grow at 15 to 18%? I think internally that would be where we target. But obviously, these are not easy, let's say, incumbents to displace in these areas. And they're, world-class companies. So let's see where we end up.
Yeah, right. So overall, what is the kind of capex do you think you will be incurring in both the businesses in the remainder of FY24, and if you have to look at FY25 from a growth perspective? And a second part to it is, how much do you think will exports be as a contributor to both of these businesses?
Yeah, so we're just coming at the end of a fairly large capex cycle, where in the last 2 years, if I'm not mistaken, we've invested north of 500 crores. The last part of that investment is going online in January. That's in the next 30 days. Post this, our revenue growth for the next 2 years should be assured at the percentage rates that I have, kind of already shared. Post that, the next phase of capex would definitely come in on the consumer side of the business. There are, we've entered into categories such as steel, as well as home appliances, and maybe there would be some capex needs there. Although I would be, amiss for me to give you any numbers at this point, because we have not been approved by the board of directors yet. And on the scientific side, we have, it's more OPEX, but it's more R&D investments, which are basically people investments, which we're already making. So the CapEx, which had to be done, like I said, has already been done. The future CapEx will be approved probably by the board in the next 6 months, at which point I can give you hard data.
Right. And overall, from an export side for both of the businesses, how much will they be a part of revenues?
Yeah, so exports on the scientific side is already about 18 or 19% of the revenues, and this is likely to go up, in my opinion, towards the 25 to 30% range, because we have significant traction over there. Of course, the domestic market is also increasing, but the issue is that in domestic market we already have a reasonable market share, so it's harder to increase market share. But in exports we have lower market share. On the consumer side of the business, our exports are in the single digits. But again, with the Make in India, the import substitution that we're doing over there as well, I believe the exports will hit double digits in the next couple of years. Let's say, in the teens, we should, achieve those numbers in the next couple of years.
Right, so I think lots to watch out for as well post the demerger in terms of how both the businesses drive and scale up from here on. Thank you so much, Shrivar, for joining us on the show. It's always a pleasure to speak to you as well after really long. So that's with regards to where Borosil goes, clearly laying out their plans with regards to where the demerger goes, the rationale for the demerger, as well as what both these businesses are expected to look like going ahead. But overall, let's quickly slip into a short break. Stay tuned. We'll be speaking to the management of EaseMyTrip co-founder, that is Prashant Pitti, on the other side. Please stay tuned to NDTV Profit. Welcome back. You're watching the Small and Mid Cap Show. Now, EaseMyTrip, that has been a company that has been in focus. A couple of triggers over there. You had the World Cup. After that, you had the festive season that has continued. And now, overall, if you go to see, it's holiday season as well. In fact, my colleague Alex Matthew will be speaking to EaseMyTrip's co-founder, Prashant Pitti. Let's go across to him to understand more. Alex, over to you.
Thanks so much, Hiral, for that. Now, the next management that we're speaking to is handling a company that has had, in all probability, quite the third quarter, because a lot of factors have worked in synergy to improve business opportunities for this particular company and the sector that it plays in. And I'm talking about travel and hospitality. My next guest is Prashant Pitti, who's a co-founder of EaseMyTrip. Prashant, thanks so much for taking the time and for speaking to NDTV Profit. Like I was saying, there's the World Cup, there's the festive season, there's the holiday season, and I'm also told that there are more marriages this year than several years in the past. So the first question to you is, how has third quarter been so far, and what are you expecting?
Firstly, thank you, Alex, for having us on the show. Alex, for all the points you mentioned, I'd like to add one more, which was basically in this quarter, we have seen highest number of inbound footfall compared to any other quarter in the past, which is, visitors, Indian diaspora coming back to the country, or people visiting India. I believe this number was 55% above than compared to the last year's third quarter. So given all that, we have seen a huge uptick and momentum in the travel space. The country is extremely upbeat about travel. In the next 10 years, we are expecting 200 to 220 new airports or helipads or aerodromes to be constructed in the country, and which I think no other country in this world can claim.
Now,
and because of this,
sorry, go ahead, please.
And because of this, we are expecting the total number of domestic passengers to go up from 120 million, which was last year, to 350 million in the next 10 years, Alex.
Okay. No, so, and that's phenomenal, which is why the potential for your business as well as the space that you play in is phenomenal. But how has the third quarter been?
So I may not be able to show you the exact numbers, but Alex, in the last quarter, we did share that as a company, we would be focusing a lot more on profitability alongside with the growth. So for this particular quarter, we are playing with the same intensity, and we are playing with the same theme, where the company is focused on profitability, and the results should be foreseen. Overall, third quarter is going great for the company, and we're looking forward to end it with the bang in this new year. And usually, as a company for EaseMyTrip, which is a growing company, our each quarter almost beats the other quarter, which is we're expecting quarter 4 to be better than quarter 3, even though quarter 3 is better in terms of celebrations, in terms of festivals. Our quarter 4 is usually better than quarter 3 because it's a growing company. We are growing more than 50% on year, which is why we would be expecting our second half, which is H2, to be almost 65% higher. Our H2 usually contributes 65%, and 35% contribution comes from H1.
Okay, and this is top line you're talking about?
This is the top line we're talking about.
Okay, you've been acquisitive in the recent past, and there are 3 companies, I believe, that you've added in just this year. What is the kind of contribution that you're expecting, or is it too early to talk about that to top line? And during the integration phase, generally there is a phase where the company is aligning with your own ideals and your own goals for EaseMyTrip overall. Is there a phase where you're expecting some bit of pressure on the margins?
Well, no, not really. See, Alex, we are acquiring in non-flight businesses. The 3 companies you are mentioning all are holiday-related businesses. So one company is extensively into cruise. One company does a lot of Balkan tours and travels, fixed packages, and one company is basically more into Kashmir region. All these three places we are seeing huge uptick, and companies looking forward to grow along with them. In fact, today only we have announced that we have acquired a minority stake in a UK-based hotel chain called as Eco Hotels, which is also a listed company. We have acquired 13.5% of that company, and we have made that announcement today only.
And so how is that fitting into the whole piece? Because, correct me if I'm wrong, Prashant, initially we're talking about mostly a flight-led business and assisting in the booking process and all of that. And you've diversified over a period of time to also take care of the complete package, so to speak, right? In terms of the staying facilities and all of that as well. So now you're moving into buying a minority stake in a hotel business. Well, where are we heading in terms of...
It's not a hood. I mean, they basically are the management company. Just like we have acquired SMID Hotels, which manages around 40 odd hotels for others. Similarly, Eco Hotels manages 3-star hotel properties. They are buying into India business, and we like the team, we like what they are doing, and we are backing them by the minority shareholding.
Okay. So, but the question is also, how is the split in terms of revenue and business going to go from this point? Do we see a larger share over a period of time? Is it going to be an even split between the hotel part of the business and the travel part of the business?
See, the time when we got listed, which was about 2.5-3 years ago, 97% of our business was flight business and 3% was everything else. And at that time, we made a promise to our future shareholders is that we would diversify our business from flight business to other businesses. So all this acquisition and organic growth in our hotel business, bus business, train business is part of the larger plan, which is to basically diversify business and bring it to, let's say, 80-20. Right now, it's about 90-10. 90% is flight business and 10% is everything else. To bring it to 80-20 in the next 1 year or so. And we are working towards it, Alex.
1 year from now, Prashant?
1 year from now.
What are the implications then from the perspective of the other metrics of the business? You said that the focus is to have more profitability, and I guess that is something that your shareholders have also seen in your results. I guess that is going to be an ongoing process. So when this 80-20 happens, what are the implications for the margins and for the profitability?
See, margins in hotel business, holiday businesses are actually better than the margins in hotel businesses. So hence, it is not decremental to the promise which we have made to our shareholders, which is to continue growing the company while being profitable. It will only add value.
No, so that's exactly what my understanding is we're talking about 40-50% margins in certain cases when you're talking about hospitality, right? So one would assume...
Gone are those days, Alex. In hotel businesses, margins for us are around 11-12%. For it's about 15-20% at max.
Okay.
On other days when we talk about 40-50% margins.
Okay, fair point. So therefore, one would assume that the blend would go up. So, but do you stop at 80? And do you stop at 80-20?
No, this is just the promise which we have made to ourselves for the next 1 year. Via organic and inorganic channel, we'll bring it to 80-20. But otherwise, the endeavor will continue. See, we have 20 million user base who use us on regular basis. Now we are trying to basically monetize them by cross-selling them hotels, holidays, bus, trains, and all the travel-related products who come to EaseMyTrip primarily for their flight booking, but now we are trying to cross-sell them various other products. There is no product which EaseMyTrip doesn't have and others have. And we are basically putting our best forward to basically cross-sell other products while they come to book the flights at EaseMyTrip.
Are you going to continue to be acquisitive to, further grow towards that journey of increasing the share of non-flight business?
Absolutely. We are looking for companies like EaseMyTrip, which EaseMyTrip has been bootstrapped all the while, never raised any capital, grew profitably, disrupt the business, debt-free. All these are the characteristics which we are looking in travel companies, and as and when we.
Okay, I believe that we might just be having a bit of an issue with the feed. Let's see if we can get Prashant back.
Hi, can you hear me now?
Yeah, go ahead, Prashant.
Yeah, I was saying that as EaseMyTrip is as you know about EaseMyTrip, which is profitable, bootstrap, never raised any capital, debt-free company, disruptive in its nature. We are looking for such similar companies, and as and when we find them, we do not hesitate to back them.
So therefore, all the acquisitions that you've made have been through internal accruals. That continues to be the case?
That continues to be the case.
No plans. So the reason I'm asking is because we've established the potential in this space is significant. You intend to grow as is the potential, right? To match that potential. You don't feel any need to grow faster than you are right now?
So if the question is that
50% growth, I know 50% growth, that's fair.
If the question is that are we looking to raise any primary capital to acquire even faster, the answer is I don't know that yet. As and when we get that opportunity where we cannot meet the acquisition demand on our own with the current cash reserves which we have or the equity which is present, then we may consider to raise some capital, but that's not something which I can debate upon right now.
And as things stand, you don't need that right now?
As things stand, we don't need that, correct.
Okay. Now, just leave us with the last bit of expectations heading into the new year. So you've said that over the course of the next, say, 4 quarters, you will have a doubling of the hotel business, both through the businesses that you've acquired so far as well, or not hotel business, but non-flight is what you've said,
non-flight.
right? Yeah.
Correct.
Yeah. So doubling both through the acquisitions that you made and possible inorganic going forward. How much do you anticipate that the existing businesses will contribute roughly? Or do you think, so what I'm trying to get is, will you have to be acquisitive in order to meet that target?
I think we will have to be acquisitive to be able to meet that in the given timeline, especially because our airline business itself is growing so fast. So when the airline business is growing, to grow your hotel, bus, train, non-air business, double the speed gets even more challenging. And which is why there will be some more acquisitions which will be required.
All right, Prashant, thanks so much for taking us through whatever you could. I know, I understand that we're in the midst of the third quarter and you can't give us any more clarity, but we will talk, I'm sure, after your third quarter results in more detail. Thank you so much for speaking to us.
Thank you. Thank you, Alex.
All right, Hiral, back to you in the studio.
Thanks, Alex. Clearly, if you see in terms of where the management goes, a lot of positive commentary that does come in, but from a longer term perspective, YTD, if you see, the stock has been under pressure. 27-28% is the kind of cuts that we've seen, though the stock is trading in the positive as we speak. Completely out of time. That's all that we have on this session of the Small and Mid Cap Show. Stay tuned into NDTV Profit to solve a lot of your queries on Ask Profit Next. Thank you.